I've got some bad news. Unfortunately, you've been diagnosed with a trading transmitted infection. Yep, you heard me right. A trading transmitted infection. And this is secretly sabotaging your success in trading and causing you to lose money. But fortunately, I've got 5 cures to treat your trading transmitted infection. So stick around. But before we do that, let's try to understand how you caught this trading transmitted infection in the first place. See, a lot of people paint trading as some sort of casual thing. As if you come home from work, you on Netflix, and then pop the kettle on, and then think to yourself, oh, why don't I open a laptop and place a trade? It's very blasé. And on top of that, there are gurus painting trading as some sort of get-rich-quick scheme. The first cure to treat your trading transmitted infection is to realize that trading is a business, not a hobby. For example, if someone wanted to train to be a doctor, there's usually a set pathway. They would have to go to university, then they would do specialist training, real-world experience with patients, and similar thing for lawyers and engineers or any profession. But the problem is people don't treat trading the same way. And you have to realize in the markets, there are winners and there are losers. But one of the biggest problems with trading is that there's a very low barrier to entry because anybody can just open the laptop and just place a trade. And I'm sure you've heard statistics like 90% of investors and traders lose money. But the reality is a lot of those are just gamblers. Sure, they make money here and there, but they're usually giving back the money to the markets in the long run. They don't have any system or strategies in place. And often a lot of those people tend to be market participants than actual traders. The second cure for your trading transmitted infection, analysis without application, is just vanity. We all know that one person who posts the most complicated analysis in trading with hundreds of indicators and trend lines. And this person will always tell you the perfect reason why the market reversed, which of course no one understands. And let's call this person Overanalysis Oliver. And by the way, if your name is Oliver, it's nothing personal. I just pick a random name. But this is the person who posts the fanciest charts with hundreds of indicators, maybe lots of Elliott waves and lots of harmonics as well. And there's nothing wrong with that. If it works, it works. But the problem is newer traders start looking at that and they're just confused. They suffer from analysis paralysis as a result and are unable to make a decision. And I think a key realization is to separate an analyst from a trader. An analyst is just giving a forecast, but often doesn't actually place trades. But as a trader, you're really taking all the information, processing it, and putting it into an actionable plan. You actually have trades open. And so these are two very different things. And just because someone is a good analyst, it doesn't necessarily mean that they're going to be a good trader. As professional traders, it isn't our job to predict the market. It's more about taking high probability setups whilst minimizing the downside. And so trading really is an art and a science. And you can't just learn it purely by binge watching YouTube videos or following the news. There are certain lessons that only the market will teach you. For example, liquidity hunts. If someone wanted to train to be a doctor, would they learn by just reading medical textbooks or by actually speaking to patients? And also, if you wanted to ride a bike, would you learn that by speaking to someone who has a PhD in bicycle management from Oxford, or someone who can actually ride the damn bike? I actually try to do what I preach and post as many setups in real time in the community as possible. Simplicity scales, complexity fails. And it was actually Steve Jobs that said this. See, many traders overcomplicate things. They chase dopamine and have a need for instant gratification. It's shiny object syndrome. They're chasing the next indicator. And I just look at my own trading journey and some of the dumb things that I did. I tried everything. I tried trend lines, a lot of supply and demand, and all these different things. And it was just overwhelming and confusing. On one hand, the indicators and the chart would say one thing, but then on the other hand, I would look at the news, especially FOMC, and it would say the market was going to be bearish. And I was just stuck in this cycle of analysis paralysis. Then I would just freeze. In the community, I've now done over 210 live streams, and I get constantly asked by traders who feel overwhelmed with the sheer amount of information available, the news, the charts. And I tell them, keep it simple. First of all, remove all the indicators, look at the charts. Is it a trending market or is it a sideways consolidation? then start with the high time frame bias, the 4-hour chart, and then you can use that for your entries in the lower time frames. And the key thing is to actually have a checklist which you follow for your trading. It's not the indicator that makes the trader. It's the trader that makes the trader. Hopefully by now, your trading transmitted infection is starting to resolve. If not, men lie, women lie, but numbers don't. See, a lot of people are overcomplicating their trading, using hundreds of indicators and flooding their charts, which ultimately just leads to analysis paralysis and second guessing yourself. One of my biggest role models in trading is actually Paul Tudor Jones, and he's actually considered one of the greatest traders of all time. In fact, I think his net worth was around 4.7 billion, and he wasn't using things like RSI, MACD, Bollinger Bands, all these very subjective retail style of trading, which of course they're lagging indicators, so they just show you what you already know. So me personally, I trade based on market statistics developed across the last 8 to 10 years. And this is just a style of trading that resonated with me because I like being able to enter trades with confidence, with rules, as opposed to discretionary, subjective retail methods. And as a professional commodities, indices, Forex, and cryptocurrency trader, it has been a massive game changer for me. And if you're losing money as a trader and struggling from analysis paralysis, emotions, and second guessing yourself, and want to be a profitable trader, then link in the description below. Ultimately, whichever style of trading you do, it all comes down to the numbers. Metrics like risk-reward ratio, win rate, and it's similar in other areas of life, like fitness. If someone wanted to lose weight, they would naturally need to track their calories, but also their weight every day. If the person just focused on the end result of their dream body, they probably are going to feel miserable. And overall, if you aren't tracking, you're slacking. The fourth cure for your trading transmitted infection is discipline wins in the short term, but the environment gets the last laugh. Ask yourself, how can you make your environment more conducive to success? For example, if someone tried to lose weight and they put a cookie jar right in the middle of the kitchen, I would imagine that that person is going to have a pretty hard time to lose weight. Similarly, if someone is trying to give up alcohol, but then all of a sudden they start going to parties, their friends will probably say to them, listen man, you gotta live a little, it's okay, just have a night off. That person eventually is probably going to start drinking alcohol again. One of my favorite books is actually Atomic Habits, and it mentions how you don't get what you want in life, you fall to the level of your systems. And this applies to all aspects of life as well as trading. A couple of ways I do that is by putting alerts at key levels, rather than just staring at the charts 24/7 and actually FOMOing into trades. You could also have a checklist in front of you, perhaps organize your routine so you have specific time slots allocated to going to the gym. Another thing is you don't need to have 10 monitors to start trading, which is contrary to what a lot of social media would tell you. Me personally, I trade based on 2 or 3 laptops. I like to have the flexibility to be able to travel and to not be tied down to so many monitors. And some of the best traders I know actually just trade using 1 laptop. And the reason why I prefer laptops personally is because I know if I have a bad day in trading, I can just fold my laptop and put it away, out of sight, out of mind. But if I had monitors, that might force me to FOMO into a trade because it's right in my face. The final cue to treat your trading transmitted infection is to understand bad habits are amplified in larger account sizes. See, a lot of traders say, once I get a bigger account size, I will exercise good risk management. But you have to understand that you have to be the worthy of the person who's trading larger account sizes. A larger account size doesn't just magically solve all your trading problems. In fact, in some cases, you have to be more careful. So a couple months back, a lady came to me for help to be a profitable trader. And she was just struggling and she was frustrated with her losses. She explained how 2-3 years ago, she actually received $1 million as part of a divorce settlement. And she started trading that. Before she knew it, she was losing that money and eventually lost hundreds and hundreds of thousands of dollars. And so she was naturally upset. And there are countless stories of traders who've made multi-millions, but then lost everything because they over-risked or they over-leveraged themselves. A large account size doesn't excuse you from trading rules. Once you make a certain amount of money, it's not like as if the market says, okay, the rules don't apply to you because you made X level of money. No, you have to keep being consistent. A lot of traders are just chasing quick profits. But again, you have to realize trading is a business. And once you actually focus on having an edge and being consistently profitable, the money just follows you. And there are also ways to actually scale up and access more capital as well. In my own situation, I made $300,000 in trading 5-7 years ago, but I didn't know about risk management and didn't have a statistical strategy or edge. And this ultimately led to losses. But after years of experience and getting mentors, I improved. But a key takeaway is to understand that a larger account size doesn't just solve all your trading problems. Of course it helps, but you have to be consistent, apply good risk management, and remember what actually led to the success in the first place. Hopefully, by using these 5 cures, your trading transmitted infection has been cured. And remember, the best traders aren't the ones that make no mistakes. They're the ones that know how to control their infection. And if you found this video helpful, then do like and subscribe to see more weekly videos.